Have you ever wondered how the financial elite manages and multiplies their wealth? If you think that it is enough to put money in the bank and wait, you are very wrong. Real billionaires use advanced tools such as hedge funds and family offices to manage their wealth and ensure constant and safe growth. But what are they exactly? And how do they work? Let's find out together. Imagine having a group of financial experts, analysts, and strategists working day and night to grow your investments. This is essentially the concept of a hedge fund. It is a unique investment vehicle that raises capital from wealthy investors and uses it for highly strategic trades, often with advanced and risky techniques. Why do rich people love hedge funds? Complex strategies. Hedge funds do more than just buy and sell stocks. They use advanced techniques such as short selling, leverage, and algorithmic trading to achieve returns that are superior to traditional markets. Low risk, high profit. Although they seem risky, hedge funds often use hedging strategies to reduce risk. For example, they may bet against the market while investing in safe assets, offsetting losses. Exclusive access. These funds are reserved only for accredited investors with very high net worth. Some require a minimum investment threshold starting in the millions of dollars. The most used strategies in hedge funds are long/short equity. They buy undervalued stocks and short sell overvalued ones, making money when the market goes up as well as down. Global macro. Invest in global macroeconomic trends using currencies, bonds, and commodities. Arbitrage. They exploit price discrepancies between two similar assets to obtain profits with limited risk. If hedge funds are the money machines, family offices are the brains behind the wealth management of the world's richest families. These structures handle not only investments, but also tax planning, philanthropy management, inheritance, and wealth protection. Types of family offices. Single family office, SFO, serves a single ultra-wealthy family, such as the Rockefeller family or the Bezos family. All resources are dedicated exclusively to the family's interests. Multifamily office, MFO, they offer the same services, but to multiple wealthy families, allowing them to share costs and obtain better investment opportunities. Why do billionaires use family offices? Tax optimization. Paying less tax legally is a top priority for any large fortune. Family offices use advanced tools to reduce the tax impact. Personalized investments. Unlike traditional banks, family offices invest in unique opportunities such as luxury real estate, private equity, and hedge funds. Generational wealth management. A billionaire doesn't just think about himself, but about future generations. Family offices create strategies to protect and grow wealth over time. Hedge funds and family offices are the two key tools in this exclusive world. But what are the differences between these two approaches, and why do the super rich use them? Hedge funds are private investment funds accessible only to accredited investors and have a single goal: to maximize profits. These funds employ aggressive, often highly speculative trading strategies to generate high returns in relatively short periods of time. Hedge fund managers use complex financial instruments such as derivatives, short selling, and leverage to capitalize on market fluctuations. However, this approach carries a very high level of risk and requires careful management to avoid significant losses. On the other hand, family offices operate with a completely different philosophy. These private offices are dedicated exclusively to managing the assets of wealthy families, with the goal of not only growing wealth, but also protecting it in the long term. Unlike hedge funds, which focus solely on investments, family offices offer a much broader range of services. In addition to investment management, they handle tax planning, estate planning, philanthropy, and even personal matters such as managing family property and business. In short, while hedge funds are high-risk, high-return instruments, Reserved for the most daring investors, family offices are real wealth management centers designed to guarantee stability and long-term growth. Two different strategies, two exclusive worlds that reveal a lot about how the richest protect and grow their financial empire. Even if we are not billionaires, we can learn from their methods. Diversification. Don't put all your eggs in one basket. Even with a small amount of capital, you can diversify into stocks, bonds, and alternative assets. Investing for the long term. Family offices don't think about immediate profits, but about building wealth over time. Reduce taxes legally. Explore tax options, such as pension plans and investment funds with tax advantages. And while we can't all have a family office or invest in a hedge fund, we can apply some of their strategies to our financial lives. Thinking long-term, diversifying investments, and protecting wealth are lessons we can learn from the wealthiest. If you want to discover more elite financial strategies, keep following our series.